Well, hello folks. We are going to be talking about why BTC will be on its way to breaking all-time high. We'll have to go into some historical context. First, before I get into the charts, I wanted to show you this. If anybody's on X and following people that, BTC maximalist crypto people, beware of this guy. The crypto rover guy, he is all over the place. I'm not trying to be condescending, but I don't feel like the guy has a proper grasp on technical analysis. Yeah, I've watched his videos, looked at his charts. He is using some old school stuff, let's just say that. And with my approach is not necessarily old school. It is more based upon smart money concepts, which is brought to you by Inner Circle Trader. And he usually doesn't do crypto. He's usually more into Forex and the futures markets. But yeah, we'll need some historical context for this. So I'm going to bring up the daily chart of BTC and try to give you an idea of what we're looking at here. So this goes back to 2020 when we had the huge soar in price, the huge drop, the back up to the high, and then we started seeing the drop again. Now, as we started seeing the drop, I want to bring your attention to what we call a breaker in smart money concepts. Now, a breaker is when you have basically, well, within this structure up top here, this where I have this low, high, lower, low. The low is basically the low of this structure that I'm pulling around here. It's basically the low of that structure. It's the last green candle going upwards. It's the bottom of that green candle. The high is the top of that green candle. So we can probably zoom in on it and get you a better idea. Okay, yeah. So that's the low, the high, and then you'll have the lower low. So with that being said, the breaker basically acts as resistance, I guess you could say. So as you can see, it started falling further and further, and even then you can see that we have another one of those right here. However, right just before that, we did have quite a little bit of a high take place. So with that being in mind, what I wanted to show you is that with this high taking place, you stretch further to the right, you have somewhat equal high, and then there's some somewhat equal highs to that, and then you have another somewhat equal high. Now, whenever you have two somewhat equal highs close to the price range, that is where liquidity forms. That means that is where you're going to have your run-of-the-mill traders that are used to trading the old school way, by seeing two equal tops and saying, well, it's going to top again, I might as well put my sell limit there. And then you're also going to have the other side say, well, it's going to be a runaway, so I'm going to place my buy limit there. Okay, so with that being said, in context of today's kind of similar equal highs. We'll get back to that. For this high to reach this high over here, it took nearly 409 days, almost a year, or over a year, just to get somewhat equal highs. In the meantime, it was dragging below all the way down to 15,000. I think it got down to 400 and something. Actually, if you look on my Tradingview page, I actually called the bottom to be 15,800. And that had a lot to do with what happened previously. But I won't get into that. But I was very close to calling the bottom. But even after that high, it still fell again down here. And what I was afraid of is that when it made these equal lows, I thought it was going to drop below that. However, the thing is, price does not like to stay in the same spot for a very long time. Okay, so price has already been there before. Price comes there again. And yeah, that was pretty much it. After that, price will generally start moving away from the area that it has been consolidating in once it's been there for too long. An example of this is going to be in ICTs, the Inner Circle Traders. It kind of formed what is called the buy-sell program. And an example of that is going to be here. So this is the buy model. So basically shows you where a market starts. It jumps to a different place. It'll jump to a different place. Kind of go, it kind of bounces around, but then eventually it breaks up and out. So it kind of shows you that, again, price will kind of gather and consolidate in certain areas. And after that, it will break out. Now, the people that did have their buy limit set in this area, I think they got lucky on the daily basis. Now, I'm not for sure how lucky they got on the hourly or the 15-minute basis, because that could have been jumping up and down. It probably was jumping up and down quite a bit, because that's what price likes to do. It likes to run through the high, fake people out, and then pull back. And then they were probably skeptical and probably started selling after it fell back, thinking that it was not going to reach higher and then run higher again, because markets are manipulated. Even the Bitcoin market, yes, the Bitcoin market is manipulated. So now that we got some historical context out of that, we will continue moving forward and we'll talk about this breaker here. So now we have this low, high, lower, low breaker. As I said, it kind of acts as a resistance area. And as you can see, if we get close up on it, it does. It comes up to it, touches it, consolidates, comes up in it, pulls back, breaks through it. Really, I'm not for sure. It may have closed outside of it, but that's the thing you usually kind of look for, is if it closes outside of that box. I may have not have pulled it high enough. I'm not for sure. But then it will start. And then again, this is on the daily chart. And then again, it started pulling itself backwards, right? It started pulling itself backwards. Ooh, usually what you look for whenever it does this is you look for the last low before breaking a high. Now, the high of this, if I want to actually grab this and move it over a little bit, you can see it was right around here, 49,042. If I want to put a little marker on here for that, I can. Option horizontal, okay. See, so it did break that high. Now, it didn't have to close above that high, but it did break that high. So, since it did break that high, what you want to do is you want to find the previous low before breaking that high. Or the run before breaking that high. Now I would call that probably somewhere around in here, because that's where it started to make its run up, because that's where it broke this high. So it broke one high already. It was already on its run to break another high. So to find the previous low, that would probably be the bottom. That would be the top. And then in this instance, yes, I have my Fibonacci set in ICT format, which is not your typical Fibonacci setup. Basically, this setup shows you where price is likely to go before going higher again, because it likes to go to discount pricing. Now, discount pricing is anything below 61.8% or lower. Generally, most of the time, not all the time, but once it's this 88.6%, which it did, that's generally almost dead giveaway that it is going to start popping back up again. So after it hits the 88.6, what does it do? Starts rising, and that is the beginning of this year whenever we start seeing the run up. Now, there was a lot of reasons for the huge run up this year. The halving, the ETFs that were coming out. There was a lot of good reasons as to why Bitcoin could have been naturally rising. And not being and possibly being manipulated by the market. The market did start buying up a lot of Bitcoin to put into their ETFs. I think there's 7 of them by now, 7 or 8. I'm not exactly sure how many there are, but I know there are a lot of Bitcoin ETFs. A lot of those companies started buying up Bitcoin so that they could have those in the holdings for the ETF. Now, that being said, it did run and break the previous high that we had back in 2021. Now, let's look at the current formation. Because there are a lot of holdings in the ETF, we're not seeing that huge drop off that we did back in 2021. We're seeing it somewhat stable in a range, right? However, if we look at the last low before breaking up and cracking the high, you can see that it has already dropped below that 61.8% and come down to the 79%. Now, almost all pullbacks, this even goes for, I will go back to the historic pullback. This even goes for this historic pullback. When it came to this low to this high, where did it fall back to? Came back to the 88.6%. Somewhere between the 80 and 88.6%, it will always fall back to. So let's get rid of that. That will be somewhat of a history lesson. And that's just in general. Almost all pullbacks, especially when they're that large, I mean, even small ones, will almost fall back to anywhere between 88 and 80%. So, that being said, now what are we looking at? And I'm still on the daily. So on the daily, I'm looking at a daily breaker right here. And that happened back in late September. And it again rose below it. Then after it broke above it, once it breaks above the breaker usually acts as support. So then it just acts as support. Again, we have another small breaker here. It's run above it. Boom, acts as support. Now, I can't say this will always act as support. It can break below and then act as resistance again. Okay, so now I know you're all probably thinking, well, there's other breakers too. Yes, there are. There is this one here as well. But again, acting as support. And if we take a look at this one, that is more of a liquidity point actually rather than a breaker, because there are two equal highs here. It's part of the current liquidity point. So I wouldn't really consider that a breaker. I would consider that part of the liquidity that is being formed right now. So we have a liquidity point that formed back, well, actually the first one was back in March. Then we have a lower one that formed back in April. And then we had two more somewhat equal highs in June and May. And then we just recently, a couple days ago, broke the liquidity points, almost getting to the all-time high. Now, almost getting to the all-time high, most traders would, of course, put their sell limits there, banking on that it would fall. Yeah, of course. The market's not always going to screw you all the time. You know, they're going to let you win sometimes. That way you continue playing. So, that being said, we don't know how long, especially since I showed you how long it took the last time. I think it was, what was it, 400 something days, and then I think it was 500 days after it finally broke. We do not know how long this is going to last. And I don't have the answers. I know I don't. I'm not going to sit here and tell you that I think I do. I'm just trying to give you a historic lesson as to what has happened in Bitcoin in the past and what could possibly happen in the future. This thing could drop for another year or half a year before it finally breaks a liquidity point. But it will. Why? Because there are two equal highs. There is a ton of liquidity resting right here at this almost $74,000 mark. There is a ton of people that have their sell limit set there. There's a ton of people that have their buy stop set there. That means as soon as that the price crosses that threshold, the market is going to get flooded with trades that are going to be executed. Money is going to be flowing into the market like crazy. Now, it could cause what's called a turtle soup. Here, let's look that up really quick. If you don't know what a turtle soup is, actually I just saw this. And it was a really good depiction of it. Here we go. ICT turtle soup strategy. If I can get it to come up. Here we go. Open image, a new tab. Okay, so this is turtle soup strategy. So as you can see, there are two highs, and then it breaks above the high, and then pulls back. Again, this is a market manipulation thing, because it breaks that high, making everybody think that it is going to continue going higher. They start buying, and then the institutions get to a premium point, and they say sell. And they sell off a ton of their assets. When they sell off a ton of their assets, it causes a huge downfall in the market. It scares all of the retail traders. They start selling off, and then it'll start going down to what is called a premium. Or not a premium, sorry, a discount. And then once it gets to that discount, I don't think it'll come up to this FVG and drop down again. Instead, I think it would, instead of going to this FVG and dropping down, it would actually start rising back up again. So that being said, the path that I think would be most likely for this. If I don't know how long it will take for, well, that didn't work out very well. I don't know how long it'll take for this to kind of mosey through and do what it's doing, but it could actually drop. And if it was to drop below these breakers here, what I would be looking for would be a bullish order block. All right, a bullish order block. And actually, there's one right here, right at about the 70.5%. However, that bullish order block has already been hit with price right here with this wick. Also right here. And so that order block is what? Somewhere around 52,000. It could even get as low. I mean, I would hate to say it, but it could reach as low as this one here. That is also a bullish order block because it is kind of another. It's basically where you have that low high or low high low or low mentality, and then when it breaks through and breaks above that, then that area that is left there is now basically an order block. So it could reach as low as that. I am high. I mean, again, pullbacks being at 88.6% to 80%. Yeah, it is a possibility. And if that happens, don't let people on the internet try to scare you or freak you out. That is just a possibility that could happen. And it could then all of a sudden skyrocket to the 127%. That's why I'm thinking the next target is somewhere around $82,000. And it actually, before it does that, it could do the turtle soup thing to where it reaches above it, breaks the structure, then drops down really, really hard, and then takes another high road up. That's what I was talking about. Instead of it doing this up and down FVG, with a fair value gap in the middle, instead, hello, I'm in the wrong thing. Instead of leaving a large fair value gap, it could. I'm not even going to get into the schematics of it, but it could get to a certain area, consolidate for a little bit, and then rise up again. Is basically what I'm trying to say. So, that being said, this is kind of the breakdown of smart money, how it works, how it shows you that markets are manipulated, what institutions look for, and how to trade and manipulate regular traders with liquidity points, with breakers. They know all of these things. They know how all of it works. So that's why institutions trade the way they do. They do it to try to trick the regular people. If you want more information about this or how to really dive into this, I would suggest checking out Inner Circle Trader's channel, watching as many videos as you can. He has his own mentorship kind of program that he put together back in 2016 that he used to charge for, but now it's all free on the internet. And you'd watch all those videos, take as many notes as you can, because he goes through a lot of different subjects, a lot of different things that I can't even explain in a couple minutes. Things like high time frames, how to look at different historical things, how to understand the difference between breakers and order blocks, and all these different types of things. He tells you a lot. So I'm just giving you a short version of that, of what Bitcoin could possibly do and what Bitcoin might do. Now, could be completely wrong, and Bitcoin could, I didn't mean to do that, but let's see here if I can just put it back down and just grab this point right here. There we go. And it could just do this. or it could break above, come back down, hit this point, and then jump up. It could do that too. That's what I'm hoping happens, because if it runs above this, pulls back down, that means this point would be hitting another breaker, because you would see a breaker form maybe over here or something like that that would reach all the way across. They would hit the bottom of it and hopefully run across the top of it instead of dropping down back below it. That's what I'm hoping happens. This is personally what I think would happen, but I don't have a crystal ball. I don't know. I'm just giving you scenarios as to what I think could happen. And I hope that you enjoyed the video. I hope you got some understanding out of it, out of the concepts. And check out my link for more if you are interested in doing some futures trading. I trade futures on Apex Trader Funding. I'll leave a link in there. And also, if you want to learn more about smart money concepts, again, I have a few videos on it, but I don't have nearly as many as Inner Circle Traders, so I would definitely check out his videos. So thank you for your time. Have a good one.